Hello, good afternoon. It's Adil Fazal here, market analyst at CFDs.com, bringing you a review of European markets for the Wednesday's trading session, 21st September 2016. Please be sure to visit CFDs.com for your trading needs, and certainly download the Trade Signal app with signals and market updates from leading providers at www.tradesignal.com. You can certainly download the app at the Google Play and the Apple's App Store. Okay, now in terms of the market reaction, really it's BOJ day and FOMC day today. We've had the BOJ fire a water pistol, that's what I'm calling it so far, especially given the fact that the actual yen has reversed. So initially it fell and now it's started to rise again, so therefore it really is a risk off tone. Now, from my understanding, they certainly seem to have underwhelmed, okay, and the markets certainly are not buying it at all. Rather than increasing the QE, they just adjusted the parameters and increased the duration, and actually basically surpassed the 2% target. So whilst they were intending on stopping at 2%, they're actually going to continue to do so. So until inflation reaches 2% and higher, they will continue with the QE, i.e. increase the duration as opposed to increase the QE itself. Also with regards to negative rates, they certainly didn't go down that path at all, especially given the fact that it certainly is hurting the bank's ability to actually make any profit at all, and thereby obviously it has a detrimental effect, and therefore obviously you have deflation obviously ongoing. So it really is a non-event. Okay, now my understanding is this, because all central banks collude together. So my understanding is that the reason why the BOJ certainly fired a water pistol as opposed to a bazooka is because they've been given the heads up by the Fed or the FOMC that they're certainly going to sound very hawkish and the dollar's going to rise, and that alone will send USD JPY higher, which really is the whole game is about the USD JPY. Now let me just bring up the USD JPY chart for you so you can get an insight. As you can see here, if I go to a 60-minute chart, you can see the reversal. So overnight we went as high as 102.8, and then obviously we reversed the whole move back down to 101.5. So again, risk off tone, risk aversion from my understanding, and therefore looking for market weakness. Okay folks, that's my understanding, my interpretation. It's one of the reasons why the USD or the Euro USD hasn't rallied, whilst the Euro and the Aussie certainly have rallied. So it really is strange. Okay, now the only detriment to the FTSE really is going to be sterling, given the fact that the dollar itself at the moment is currently holding resistance. Now let's just look at the US dollar here. US dollar chart, you can see here topping tail and daily chart, and therefore that doesn't bode well for GBPUSD. GBPUSD really is what the market has been relying on. The GBPUSD now is starting to show support, and that's one of the reasons why the FTSE 100 is certainly weak today as well. Okay, the FTSE is showing weakness, immense weakness compared to its peers. Okay, so showing immense weakness compared to its peers. Right, and other than the other fundamentals, let's have a look. Okay, just to clarify, nothing really, folks, other than the fact that yes, we had oil inventory data overnight, and again that's certainly painting a bullish picture for oil, hence the reason why we're seeing oil past $44 this morning. You have, although copper certainly is weaker, so that certainly isn't a good sign. Whenever you see oil moving higher with copper moving lower, that certainly is not a good sign at all. Okay. Other economic data, let's just go over this morning. Nothing really from Europe this morning. Nothing really from Europe. Again, it's more of a central bank day. We have crude stocks data at 3:30. Then we have FOMC really at 7, which really will be shifting the market. And then we have the RBNZ as well. So certainly a central bank week. Okay. Other than that, nothing at all. In terms of comments, let's just have a look here. US mortgage applications came in on the weaker side. Yes, we did have the OECD certainly cut Japan's growth, cut European growth, actually raised UK growth, and cut US growth, and actually trimmed the global growth as well. So OECD warns weak trade and financial distortions damage global growth prospects. So that certainly isn't a good sign at all. With all this QE, etc., and increasing duration, it certainly isn't working. Okay, so again, we had some comments with regards to Mr. Pryor. That's one of the reasons why the euro certainly is subdued so far. And that really is a summation, really. It's a boring day with central banks dictating. But having said that, when central banks are active, it certainly isn't boring. So let's just try and understand the market from a technical perspective now. Let's go to the daily chart, the German DAX, first of all. So German DAX approaching gap fill resistance, therefore looking for risk aversion here. 60-minute chart has slammed into that 200 MA, so again looking for risk off. Now obviously we've got two unfilled gaps below now, so the market certainly will look to potentially target those gaps. Okay, so the German DAX certainly coming into resistance, into his pivot R3 resistance as well. If you look at the 10-minute chart, potential double top pivot R3, and again like I said, you have gap fill at 10,570, so not too far off gap fill itself. Now given the fact that we've left two gaps behind, that certainly isn't a good sign. And again, market price action will certainly be attracted towards that. And that's one of the reasons why I'm maintaining my bearish bias. French CAC now, daily chart, the French CAC. Really, it's more of a lower high, if anything, folks. Lower high, if anything. It'll be interesting to see how far this market will go. If I take the pivot high, take it to pivot low, we're into that fib 50% on the French CAC. 60-minute chart, holding that 200 MA. Just above fib 75%. We still have the unfilled gap above as well, so just bear that in mind. 10-minute chart, again, two unfilled gaps below now. Okay, so certainly a potential double top scenario here on the French CAC, and then looking to potentially move lower, so bear that in mind. Okay, looking at the FTSE 100 now, certainly has been weak this morning, given the fact that we've had Majestic Wines. I think there was a profit warning from there, so again that certainly subdued the actual FTSE, and given the fact that the US dollar already is potentially topping out, and therefore the GBPUSD trade is certainly bottoming out, and therefore looking to move lower. Also given the fact that USD JPY has reversed back down to 101, again that isn't a good sign. So FTSE on the daily chart, you can see here into that fib 75% potential topping tail at 6880. That certainly has held thus far. 60-minute chart at the moment, yes, you do have this potential bull flag. You have a bullish engulfing candle led by the BOJ move of increased duration, etc. Oil prices obviously above 44. It's not really convincing, let's put it that way. Okay, on the 60-minute chart. 10-minute chart, the FTSE 100, at the moment we're just basically trading sideways. Okay, bear that in mind. Having said that, you do have an unfilled gap below, so we certainly need to look to potentially close this gap. The gap is at currently 66 or 6835. Okay, 6835, so watch for that gap. Then you have support at 6825, resistance around the 6815 level, and then we still have that gap at 6710 that must close. So certainly isn't a good sign, that's all I can say. Okay, so from my understanding, my interpretation, this pattern is not good. Now if I do get the opportunity to short the FTSE again at 6880, more than happy to do so if that opportunity arises, because the FTSE is showing immense weakness compared to its peers, okay, in Europe. So again, weak as well. Sterling weakness certainly come to an end, and looking for support, and therefore the FTSE itself is finding weakness. Okay, the Euro stocks now. Bring up the Euro stocks. Now Euro stocks are into pivot R3 resistance, as you can see on the 60-minute chart, daily chart. Again, you are still looking to potentially test that 2900 zone, so looking for that lower low. And again, the 60-minute chart is into that fib 75%, so therefore looking for exhaustion. Going to a 10-minute chart, you're into back a double top pivot R3 resistance. RSI obviously overbought. Okay, previous support equals resistance as well. And given the fact that you've got two unfilled gaps below, market certainly is vulnerable to a sell-off. So again, looking for a move lower here, folks. Okay, further weakness on the Euro stocks itself. Now let's just quickly bring up the sectors. Let's go to the European sectors first and foremost. Okay. Let's just see if we can give you an insight here. So stock 600 banking sector. Let's just quickly go to the daily chart here. Stock 600 banking sector certainly has been relieved, given the fact that the BOJ did not go further into negative rates, thereby hurting the profitability of the banking sector. So certainly a relief rally here, but we all know what happened yesterday with regards to Wells Fargo and the fraud that was committed there. And then obviously we have the situation with regards to Deutsche Bank. Okay, so again, certainly a negative sentiment on the banking sector from my perspective, and therefore I would interpret that as being bearish, and therefore looking to more than happy to look to short any potential pop in the banking stocks. Okay, so again, keep that in mind. Okay, in terms of other sectors, let's just quickly bring up the European sectors here, because really, realistically, they're all one. Let's just quickly have a look here. So industrial, so oil and gas. Let's just quickly bring this up for you. Daily chart. Okay, so daily chart, no real conviction higher, even though the oil prices have popped. 60-minute chart still languishing on the oil and gas sector in Europe. So again, it's not exactly a good sign. Okay, that's all I can say. We held gap fill, we bounced, and that's it. Really, it's not much of a move higher, folks. Okay, hence the reason why I'm looking for further weakness. Okay, let's look at the industrial goods sector now for the European economy. Now, we currently are into gap fill resistance on the daily chart. 60-minute chart, you're into resistance at gap fill, topping tails. So again, indicating weakness and looking for a move lower on industrial goods. If you look, bring up the healthcare sector now, which again is quite heavily weighted. We certainly are topping out on healthcare. It's been one hell of a rally on healthcare. And again, looking to potentially move lower. 60-minute chart certainly seems exhaustive from my perspective with that topping tail, and looking for weakness. So again, just trying to break down each sector here, as always. So you have construction and materials, okay, or consumer and materials, sorry. Banks we've certainly looked at already. Let's just quickly bring up the consumer materials. Again, this probably really is the only one that certainly is benefiting, okay. Having said that, we are looking for a lower high, okay, and then obviously looking for a move lower again. A lot of the emphasis really will be on the euro with regards to the actual European equities, and you can see the daily chart, the euro clearly into double bottom support, okay. So given the fact that we're into double bottom support on the euro, therefore looking for weakness on European equities. 60-minute chart again has bounced off support, and the 15-minute chart is showing you potential inverted head and shoulders formation. So keep an eye on that as well. Okay, keep an eye on that as well. On that note, bid you farewell. Again, keep an eye on the FOMC later today. Again, the move there will be important. If the actual Fed is overtly hawkish and therefore sends the euro lower, you are going to see a rally in equities, in European equities. If the actual FOMC is really dovish and does not indicate any potential rate hike in December, then you are going to see European equities suffer with a stronger euro. So bear that in mind as well. So there's a lot of potential outcomes as well, a lot of scenarios, etc. So, but that's sufficient for now. Okay, bid you farewell, and again, good luck for the FOMC. I'll do a end of day market report later, and certainly give you an insight with regards to the potential FOMC reaction. Goodbye now.